Hi everyone. Sorry. Hi everyone. My name is Yele Oyekola, co-founder and CEO of Duplo. Duplo is a B2B payment company based out of Lagos. We enable businesses in Lagos or Nigeria simplify the way they pay other businesses and manage their approval workflows with account payables and account receivables. I'm glad to be here. Thank you.
Hello, everyone. Thanks so much for coming. My name is Gerard Okonkwo. I'm the head of go-to-market at Anchor. And basically what we do at Anchor is we build infrastructure that is required for you to embed and launch financial products in a very compliant and seamless way. Thank you.
All right, thank you, everyone. So without wasting so much time, I want us to dive right into it. So we know that for the past few years, everybody has been talking about embedded finance, and some people might be wondering what that actually means. So I would like to have your definition of what embedded finance is. I'll start with you, DG.
So for me, embedded finance is an evolving scope across the world. And it reminds me of when we wanted to embed internet in everything. So we used to call it Internet of Things. We used to call it smart devices. So basically, the same way you want maybe your Bluetooth speaker to have access to the internet, you want your camera to have access to the internet, which is embedded. The same way you want to embed finance in the ordinary journey that customers have that have nothing to do with finance. So I'm trying to check out and I'm able to get a loan. I'm trying to buy petrol and I'm able to get a loan or access to financial services right there at the pump. It's something as simple as that. Just having finances available in an ordinary journey that usually doesn't have finance.
Thank you. Emanuela.
Embedded finance is, like he said, just taking finance and putting it in everything that a customer will ordinarily interact with, so that you're not limiting financial services to pure financial play. Anything basically that a person or a business would interact with, you're just making finance part of that journey, because at the end of the day, finance is part of almost everything that we do.
Okay, Yele.
Yeah, thank you. So for me, embedded finance occurs when non-traditional financial players are able to offer financial services to their ecosystem of users. So you can imagine a supermarket offering you a credit card so you can buy from them continuously, or a gas station offering you a wallet as well. So far in Nigeria, we've seen that happen mostly in lending, where you have folks like B2B marketplaces offering lending services to their retailers, for example. And the hope is that we see this occur more with insurance products, savings products as well, and products that just help businesses and individuals live better lives. But yeah, it's just simply put, when non-traditional players are able to offer financial services to their users and partners as well.
Thank you. Gerald.
Okay, so for me, in very simple terms, embedded finance is when you're able to carry out financial transactions on everyday platforms that you interact with, right? I'll give you an example. Some of us here came with ride-hailing apps like Uber, Bolt, and for some of us, you have your cards on those platforms, right? So the fact that you can carry out that on its own is a financial transaction. The fact that you can pay on your Uber ride by just embedding or adding your card to Uber, the fact that you can go on Jumia, buy things and make payments. So basically, everything that you interact with every day, all different kinds of platforms, but the difference is you can carry out some form of financial activity on that platform, right? So in very simple terms, that's basically what embedded finance is referring to. Thank you.
Thank you. So just go to the next question. I'll start with Yele. We know that the era of embedded finance is here to stay. For the past few years, everyone has been talking about it. And there's a new study from Juniper Research that found that the market for embedded finance will move from 43 billion in 2021 to about 138 billion in 2026. That's 5 years, and the growth is massive. So it's clear that it's not just a fad. So what will you say, what has changed and why is embedded finance a big deal now?
Thank you, Esther. Um, very, very various reasons. I think the biggest one is that right now we see a lot of consumers are demanding more from businesses and merchants. That's one. Two is we're seeing more businesses just trying to make more revenue and improve their bottom line. That's two. And then three is that we're seeing that regulation has become a bit more friendly and open to innovation as well. So in the past, it was almost unheard of for a Duplo, for example, to go to Providence Bank to embed their APIs. That didn't happen in the past, right? But now we're seeing that regulators across the world are just trying to make it easier for businesses and consumers to just benefit as well. So like my main example is the B2B marketplaces here across Africa. So using Trade Depot, Sabi, and MarketForce as an example, they've been able to build an immense relationship with their users where these guys can order goods from them directly. Before, what would happen is they would go to their distributors or to their manufacturers directly and order. But then what you see now is that guys like MarketForce and Sabi are now able to offer financial services to these guys, like lending products, savings and insurance. So I think that this study is, of course, very valid. We're going to see immense innovation. We're going to see immense growth with embedded finance over the next few years. But the major reason is that now consumers are demanding much more from businesses. Businesses are trying to, of course, improve revenue and just improve stickiness as well with their users. And now regulators are being friendly now to innovative products across the world. So yeah, that's why I think that this will continue to grow.
Thank you. DG, what's your take on this?
So for me, the way embedded finance is going to evolve is going to be interesting in the sense that over a period of time, right, you are not going to have, we're going to stop talking about embedded finance because it's going to be like part of our everyday life. So like I mentioned before, nobody talks about IoT anymore, Internet of Things. Nobody talks about smart devices anymore because everything is smart, right? And the reason is because, like she mentioned, finance is something that transcends. So sometimes I may eat just once. I may want to watch movie just once. But underpinning everything is exchange of value from the person consuming the value to the person providing the value. Now, by putting embedded finance everywhere in a seamless way, it's just going to disappear, but it's not going to be everywhere. So those are my own thoughts about it.
Okay. So I'm just going to add another layer to the question for you, Emanuela. So how can this significantly improve the everyday life of Nigerians and Africans?
I think that, first of all, because like more people are coming online, more transactions or more things are happening online. So imagine if you had to pay for instance, your Netflix subscription, but you can't do that on Netflix because there's no payments for them to embed there. So you now have to go to the bank to pay your bill. So you can see that you're just paying for your Netflix subscription from your house. You just save your card and every month is getting debited, right? That's like one of the simplest examples of how embedded finance is helping. So it starts with payments, but then beyond payments, because payments is pretty popular because before anything happens, there has to be payments, right? But now beyond payments, you can now see things like credit, insurance. So you want to move houses, and then you're booking your moving truck. You want to pay for insurance. You don't have to leave there to go and get insurance somewhere else. If there's someone who offers insurance on that platform, you can just simply check out insurance, and then you've insured that your movement, right? Or say you're a business owner, for instance, and you do business on a certain platform, you need to get credit. You don't have to go to another platform totally. If there is embedded credit in that, you can just take advantage of it, get some credit to do whatever you want to do, and then move on. So like generally, it's just the same financial services that we'll do is just coming to meet us rather than us going to look for it everywhere. So I think that like how is making life easier is already pretty evident. Is like it will make life more easier as it grows and expands and becomes more adopted.
Thank you. Gerald, do you have anything to say
Yeah,
about this?
definitely, right? So just to follow on with, what she earlier said, she made mention of insurance, and it's also important to note that the idea of embedded finance is beyond just payment, right? Because most times when people think about, or when they hear embedded finance, they think you're referring to just money exchange and payment and all, right? But insurance, it's also important to know that insurance is a part of embedded finance, savings, investments. Like I was surprised, I checked, I use one of these popular apps for my financial transactions, the neobank. And I checked the other day and I saw that they've added investment. Now I can invest in foreign securities outside this country, right? So that was really something, I was excited to see. So basically, embedded finance and what has contributed to its massive adoption is number one, technological improvements across board, right? The fact that we now have the capacity to even do that is major. And just like Yele also mentioned, the fact that customers are now also demanding more, right? So I don't want to have to leave where I am to complete certain types of transactions, right? I was booking flights some years back, and I noticed they now embedded insurance, right? So you have that option. You want to insure your trip on this flight, right? It's easy, it's seamless. Naturally, I will have had to go to one of these insurance companies, insure my trip, but you do everything on one platform. You order your food on Bolt Food or whatever. Your card is there. The guy delivers it. You're auto-debited. So these are everyday adoption that we see. And definitely, it makes life easier for every single one of us. Thank you.
Thank you. So, everything we are saying, I just feel like it's the same people using these services. You and I, upwardly mobile people that are quite knowledgeable. There's a stat from BPC that says that, I'll just read this out. So 57% of Africans don't have an account at a formal financial institution. Sub-Saharan Africa accounts for one of the lowest credit at 3%. This clearly shows that there's a lot of work that needs to be done. We are using this, we're talking about it, but I still feel it's the same people using it. And we have like fintech springing up here and there, doing amazing work. Funding is great, but I still feel like there's still a lot of groundbreaking to be done to include like these people, because this starts of people who don't have access to even regular financing, let alone embedded financing. So how would you say embedded finance can move the needle in driving like financial inclusion on the continent? So, DJ.
Okay, thank you so much for that. Scary statistics,
Yeah.
but then it's solvable. And I will give you a perspective. So like 22 years ago, for example, only 0.4% of Nigerians have access to telephone. Right? So, and at that time, if you needed to get a phone, you fill a form, you have to know somebody. It could take months to get it. Now, probably even a dog has a phone. There are more SIM cards everywhere. Beyond the fact that you use SIM card on your phone, you also have them on your devices for the internet. Now, but what is that saying? Today, you mentioned 57% of Nigerian adults don't have access to maybe bank accounts, and 3% have access to credit. Reality is that that's going to change. How does it change? It's not like it's embedded finance that will solve the problem, but the way things are moving, those problems will be solved. So the first problem will be getting them to have accounts in a very seamless fashion. Prior to now, you need to go to a bank, but there's a whole lot of work being done by the super agents that's removing this friction. You show up one-off, and then you get your account, and then you're done forever. Everybody is having access to smartphones because you literally will need internet-enabled devices. But then it's not something to be scared about because smartphones are getting cheaper, like incredibly cheaper. Internet service is the only thing that the price has been going down in Nigeria. It's opposite of inflation. A time comes when everybody will have access to it. Yeah, they may not go to school, but they will know how to use it. And when you get to this stage, what you found us is that embedded finance itself will now become more interesting because there are now more people to sell things to, and they can use things in a transparent way. Like I mentioned, when embedded finance becomes pervasive, it becomes transparent and invisible. So you talk about insurance. What will even happen with insurance is that nobody will even ask you to buy insurance anymore because you will be so embedded into the service that you won't even see it. Maybe nobody will even ask you to pay for anything because it's going to happen transparently. So embedded finance itself, in summary, will not solve the financial inclusion problem, but the other growth of financial services is going to solve financial inclusion, which will make them averse to embedded finance.
That's insightful. Thank you, Gerald.
Okay, so I have a slightly different approach to this, right? And that's the fact that, yes, even though embedded finance has the capacity to accelerate financial inclusion, one thing that's very important to note is the fact that we, first of all, have to have digital inclusion, right? Because that's the only way you can interface with, I mean, you cannot carry out transactions if you're not registered even in the traditional financial institution. If you don't have a BVN, if you don't have, it's very difficult, right? So in Africa, even though, yes, embedded finance can accelerate it by putting finance in everyday platforms that we naturally interact with, it's also important to note that digital inclusion is also as important, right? So we have to be able to, onboard as many Africans as possible into the digital, world, right? And then we can now accelerate how they now interact and how they can carry out their everyday financial activities, right? So that's my take.
Manuela.
Right. Yeah, so I agree with everything that was said. I just want to add in addition. The first thing I want to say is that like finance is including people digitally, because you have companies that their sole product is being able to advance smartphones to people. Like that is finance solving digital inclusion problem, right? So it's like a goodwill where, yeah. And then the second thing is that there are also companies that are able to pull in people through USSD. And then you have things like Momo, MTN Momo, right? Like right now, you can literally open a Momo account to do transactions. And then over time, there are other financial services that can be embedded into Momo. If you go to places like Kenya right now, you can use M-Pesa to get like credit. They started with payments initially, but right now you can use M-Pesa for Lipa later to get credit, right? So I just feel like beyond the digital inclusion, we're going to find a way to distribute more financial services to people. And as we start, it always starts with payments, right? But as payments get to more people, so will other financial services be embedded into those products, and those things will reach them as well. But also the fact that financial companies are also looking for how to include everybody digitally.
Thank you. Yele, please.
Yeah, totally agree with what everyone has said. But I think something we're forgetting as well is KYC in all this. So yeah, we're trying to include everyone, but do we actually know the people we're trying to include, right? So I think beyond just embedded finance as well, there has to be a lot of work around KYC, and then providing seamless ways to onboard these different users. But I think the beauty for me is, one, now consumers will have more options. So with embedded finance, you're being met where you are. So imagine you're a farmer, for example. We have a lot of agri-tech companies in Nigeria working with guys like One Pipe, where they're actually being offered accounts to get paid. So I think the beauty about embedded finance is that you're actually being met where you are, regardless of where you are within the value chain, and that's incredibly important. And then two is, I think now the beauty about embedded finance as well is that you can actually provide super apps where you have everything in one. So payments, lending, investment, savings. And this just provides more options to these different customers across the value chain as well. But I think for me, the main thing is KYC and how we can onboard these different users seamlessly and a bit more efficiently as well across the entire country.
Thank you. I like the different takes on like the questions. Thank you. So, with anything growing or any sector growing, we need to also look at the regulatory constraints. So with embedded finance, are there any regulatory constraints for the growth of embedded finance, and how can stakeholders navigate this? So I'll start with you, Gerald.
Okay, so it's also important to note that embedded finance, right, when we refer to embedded finance, you take a step back and look at what's powering embedded finance. And that's the fact that there's an infrastructure behind embedded finance, right? And that's what is referred to as banking as a service, right? So banking as a service is basically a model where, financial institutions are extending their infrastructure for you to now be able to embed that financial product that you want to embed on your platform that customers, with, right? So now, who is, behind those financial institutions? You have policymakers, we have the likes of CBN, we have regulators, right? Now, the regulators actually play a very vital role in how, embedded finance will succeed or fail, right? So it's also very important to know that in as much as we're trying to disrupt and also try to make it easy and, make access to financial products as easy as we want it to be, stakeholders also have to be carried along. Education also needs to happen. They need to be able to see the benefits, right? Because at the end of the day, we have the policymakers who, can pass laws or pass legislations that can affect what we're doing. Yeah, so that's my take.
Okay, so from what you're saying is there needs to be a lot more education about this sector. Okay, thank you.
So I think
Okay.
if I could add a perspective to it, so finance is very powerful, and that's why it's regulated. And I feel like what should be happening also is that tech companies that are in this space, they need to engage with regulators to let them understand what they're trying to do. And at the same time, they also need to understand the power of what they are doing. And I'll give you an example. In Kenya, like about a couple of years ago, somebody took a loan and he couldn't pay back. He was harassed by the lender and he committed suicide. Now, I don't think any product manager will imagine that somebody could die because of their product. Now, these are real things. So we need to balance that in to make sure that, look, as we are creating products that actually are not dangerous, and also carry regulators along as well so they understand what is being done so that regulators don't come around to throw spanners in the wheels of progress.
Oh, okay, so I don't really know much about like how like the kind of regulation you will need to be able to offer embedded finance, right? But I do know that if you want to offer financial services, embedded finance makes regulation easier. So you need to know like the regulations that exist. You need to be compliant both in like everything you do, right? So you're keeping up with best practices. But then you might not need to get the really expensive licenses. So say you want to accept payments, for instance, you don't have to go to get a switching license, or like you don't have to operate like a gateway, right? Because a gateway exists, you can embed them and then get the essential license you need for your core business. So like for me, embedded finance makes the conversation around like licensing and all of that sort of easier for other financial services as well as other businesses that want to embed finance.
Yele, what's your take?
Yeah, thank you. So the first thing is there has to be a two-way conversation between regulators and innovators. So right now, everyone is scared of CBN, and that shouldn't be the case. I don't think they mean bad at all. I think they're actually doing an amazing and important job at protecting people's lives and money as well. So there has to be that relationship whereby innovators can reach out to the CBN and just educate them on what's happening across the world and just technical advancement and vice versa as well. But I think for businesses that are now able to offer finance to their users, it's incredibly important for you to be compliant because now you have access to financial data that you never had before. And how do you manage that, right? You're dealing with people's money, savings. We've seen things like MMM, where people's money are being lost. That's actually embedded finance, really. So I think there has to be more work being done around trying to just protect people's financial lives. But the main thing is just that two-way conversation between the innovators and the regulators. But yes, I think regulation is incredibly important in this space. And also there are a lot of gray areas as well that currently exist. So for example, as a payment provider, how do you then get the APIs to provide virtual accounts? Do you go directly to Providence Bank or do you go to the CBN? We're not very sure what happens there. So I think, yeah, more conversation from the CBN directly as well will provide awareness for everyone.
Thank you. So my next question will be, Gerald, you touched on something. You talked about the infrastructure powering embedded finance. So A lot of people don't understand the difference between banking as a service and embedded finance. Would you want to talk about that?
Okay. So, you know what's interesting? I'm just here and I'm thinking about back in the days when, you want to pay for cable TV, right? My dad would give me the money, I go to the bank, I make it there, and then we call DSTV or you text your teller number or whatever to them, right? And then they activate your subscription. You can see the entire journey, right? This was, some few years back, right? And now today, I just pick up my phone, like she mentioned Netflix, right? I don't even need to do anything. My card is already on Netflix, and I'm auto-debited every month automatically, and my subscription keeps rolling, right? So now that is embedded finance, right? Like we've all been saying, the platforms that you interact with every day, the fact that you can carry out your financial transactions, or not just financial, you can carry out any type of transaction like we've been mentioning, insurance and the rest, right? You can do them on your already existing platforms, right? That is embedded finance, right? But now, when you're referring to banking as a service, now, like I mentioned earlier, there's something powering the ability for the owners of those platforms to be able to do that, right? Now, they can't achieve that by themselves, right? There has to be some level of infrastructure. There has to be someone that is willing to extend that capacity to them, right? That is banking as a service, right? So, for example, we at Anchor, right, what we do is core banking as a service. And what that typically means is we extend APIs, we extend tools for everyday platforms to be able to embed these financial products on their platform, right? And even for digital banks, right? So say you want to launch a digital bank for millennials. Like we've all been mentioning, you have to think about regulatory constraints, getting a license, getting all of that, right? But with a company like Anchor, one of the things you can do is, with just our APIs extended to you, you don't need to think about license, right? So this is like compliance as a service. This is like license as a service. Everything has been covered, right? And you can literally embed and launch in just a few days, right? So I hope I've been able to give you that very clear difference between what embedded finance is and what banking as a service typically is.
Okay, thank you. I won't take questions. If you have questions, please signify. Any question? Okay, I think we are good. Nobody. All right. I would ask you, Adidiji. So, within the lending space, can you talk about how embedded finance is really helping advance that space, so we understand that for a bit?
Thank you so much. I mentioned that finance or payment is part of everyday life. You're getting food, you're paying school fees, you take Uber. Now, what credit does is that credit is an accelerator. Today, if you have a value-creating idea, but you don't have money to do it, you probably stop. That whole value chain that you could create is lost. Now, what credit does, in fact, I don't think embedded finance can go far without credit. What credit does is that it empowers people to be able to do what they need to do now, create value at this time, and then get to pay for it at a later time. Now, in doing that, they also create value for the person giving them the money. So imagine if I had $1 million somewhere, and I kept it in a savings account, maybe it would give me 4%. But if I were to be a lender, maybe that could return maybe 20% a year. Now, embedded finance allows people to have access to fund and then create value for themselves and create value for everybody. Case in point, you're taking Uber, you need to get air. You don't have money in your account at that time, but maybe you are coming for a meeting, you are coming to buy something. Making credit available, even as small as 2,000 just to take that ride, has already saved your life. You want to buy food, you don't have money instantly at that moment. Finance can actually help you solve that problem. You need to pay your rent, you need to send anybody to school. So credit is part of life. It's only in Nigeria that credit is a big deal, that either we don't have access to it or it's demonized. If we are living in the US or in Europe, for example, in the US, you pay credit to go to university, you have access to credit to buy your first car, to get a house, to get a phone, to literally build your business. But hundreds of millions of Nigerians today don't have access to credit to build a better life. By making credit available as embedded finance, right? Lenders also have the opportunity to assess that credit at that moment. They know what they're using the money for. The money can't be wasted. So for me, I'm very excited about credit and know the impact it could do in the lives of Nigerians and Africans as a whole.
Thank you. Manuela, so so I mean, for those that are trying to come into this space, you know, you're trying to launch a startup, you have this beautiful idea, but you also want to make sure you can leverage on like embedded finance, how the growth of embedded finance. So how would you advise like a new founder or somebody who's working to come into this space?
I think my advice is you don't have to build everything by yourself. The general advice for startups is always like launch as fast as you can and learn on the way. So learning does not have to be expensive for you. Imagine the time and the money that you will spend trying to build everything by yourself. Instead, you can just always, like when it comes to finance or even just other aspects of the company, right? You can always just collaborate or work with good partners that already offer these services. So for instance, Anchor, that offers like core banking APIs. You don't have to go to Providus and beg them to give you their APIs, or even just like trying to build that all out by yourself. You can leverage platforms like this, from finance to like KYC to everything, so that you can launch as fast as possible and know what is important for you, what is necessary, what you're taking out, what you're putting in, and then grow from there.
Thank you. Yeli, piggybacking on that, what will you say are like the three mistakes to watch out for when launching a new startup?
Like a billion. I think the most important one, and that a lot of people forget, is choosing the right partner or co-founders. That's one. I think if you look at the stats as to why companies fail, I think that's like top two. So the right co-founders. Two is trying to solve a problem, like a real problem. So a lot of founders just tend to do things that are flashy, that can actually just be features, not product. So I think that's one as well. And of course, choosing the right investors. So right now, or even a year ago, there was a lot of money around, and people were just raising money from everywhere and just random investors. But actually understanding why you want a particular investor is also very important. So I'll say those three things are quite critical. So yeah, the right team, so yeah, right co-founder, solving a real problem, and choosing the right investors as well.
Okay, thank you. Gerald, then I thought this, I'll just ask if anyone has a final thought, then we're done. You have a question? Okay, can you help microphone someone? Thank you.
Hello everyone. My name is Emmanuel. So I would like to ask this question to him. I can't remember his name. Forgive me.
Adedeji.
Adedeji, thank you very much. At the start of the discourse, she mentioned statistics that in 6 years, the what's it called? It's going to get to 148 billion.
138 billion.
138 billion. How feasible do you think that is in 6 years? Do you think it's feasible? Do you think we can get there with embedded finance in 6 years?
Okay, yeah, I think it's feasible, but a few things have to be solved, right? And the problem to be solved is to ask yourself, why is it that we don't have credit in Nigeria? So we have 200 million people who wants credit, right? And then they don't have access to credit. But then I will give you the example of this by going back memory lane as well. And before GSM became popular in Nigeria, if you took a phone, you will pay your bill at the end of the month. So what we found out was like a lot of Nigerians, even government bodies, would make phone calls and not pay their bills at the end of the month. So even when GSM wanted to start in Nigeria, foreign companies, people as big as maybe Vodafone, T-Mobile, AT&T, they didn't want to come to Nigeria because they look at these 100 million people will make phone calls, call their friends, call your cousins, and then they will not pay their bills. So that thing didn't happen. What happened? In the end, somebody figured out that, we could make it as prepaid. So you put money down to make a phone call. That solved the problem. And suddenly we have over 200 million lines in Nigeria. Now, if you're going to solve the problem of embedded finance, right, you need to also ask yourself, what do we do if somebody doesn't pay? The average Nigerian, and it's natural, it's not about Nigeria, it's natural anywhere in the world, when there are no consequences to something, you just do it, right? So in Nigeria today, there are no consequences to not giving out loans. So if somebody did embedded finance today and say, oh, you can take a meal and pay 2,000 and pay back later, everybody will eat, nobody will pay. Even if you know my house address, you're not going to spend 5,000 on Uber to come and ask me to pay back 2,000. That business will die. But imagine a world where if you took a loan and you don't pay back, you are literally locked out of all the most important things, right? People will start having at the subconscious that if I took money from someone, I have to pay. Now, there are two ways to solve that problem. Either we chase the government to put down consequences for this, which we know will not happen, or we create an infrastructure that makes it happen. And that's what we're doing at Lens Square. We're literally creating the cloud infrastructure that allows lenders to set up their businesses, and you can lend to anybody with peace of mind, because there's a high chance that the person that you want to give loans to, if he has made a mess of himself somewhere else, will never be able to get a loan from you. If we get to a critical mass, then everybody knows there's consequences to not paying. Once, if you have 100 million Nigerians taking loans, you can have an idea of how that is. Even if 100 million Nigerians should take 100,000 loans in a year, on an average, you know what the numbers look like. That's why I said it is plausible. So you've seen a country with 400,000 lines to having MTN that makes over 2 trillion in revenue a year. That is a possibility that exists.
Thank you. Any other question? Okay, sure.
Okay, so what I want to add to that is that, like you mentioned, the reason for the slow penetration of credit is two things. One is a cause and effect. One is that there's no real consequences for when people default, and so some lenders, they are forced to do unethical things, and then people become afraid or they become shy of credit. So credit begins to look like something bad. But we're trying to change that, right? You can see like there are a lot of like digital lenders, even regulators are trying to change that in Nigeria to see how that changes. There's like, she mentioned that there's 3% penetration of credit in somewhere like Nigeria. Contrast it to somewhere like US, where a great mass of their transactions are actually credit. So it's a credit-driven economy, and credit can really drive an economy. It's something that is really needed here, and as more and more things come into play, more players in this space, more regulation, more structure, more people embracing and adopting credit, it will definitely get to that point. I think IFC says that there's like a $300 billion annual gap for credit in Nigeria alone. So just imagine, like that statistic is really just a small thing, like it's very possible and would eventually get there.
Thank you. Yele, still on Emmanuel's question, he said that in 5 years, do we think that we can achieve $138 billion dollars in revenue from embedded finance? What are the things that you think, how do you think embedded finance will evolve, and what are the things we should watch out for?
Yeah, good question. So they've been focusing heavily on lending, which is, of course, the most important problem right now that a lot of fintechs face, and just individuals in Nigeria. But I think we can go deeper than that, right? So we can offer investment products to individuals and businesses, savings products, insurance as well. And if you take one part, which is just lending, multiply that by 3, you can see the potential, right? Across savings, investment, and insurance as well. So I think that's incredibly possible. But then the issue is we need to get a lot of people digital as well, which is back to my point and his point, whereby how do we get more people digitally included? Because there's no point of you embedding finance if there are no customers for you to use it, right? So now, even with this cash crunch we're seeing in Nigeria now, a lot of financially excluded people will become more afraid of banks over the next few years, and that will hamper that target. But what can actually happen there is we can see, if you're an agri-tech company, for example, why don't you offer financial services to this kind of customers that are already excluded by the banks? A lot of people were actually hiding money in their mattresses, in their kitchens, and this is actually legit, real stories, right? And they went to the bank to go deposit this money, and it just wasn't possible. There wasn't cash, and now they're actually scarred for decades. They can't go back to the bank. So how do we get those kind of guys back to even become to get access to financial services? And that mistrust will continue to happen. But I think like platforms like Anchor and Lens Square and different platforms that across Nigeria will provide that gap between the banks and these users. But I think in Nigeria we have to go beyond just lending. How do we improve payments for businesses? How do we improve access to insurance and investment services as well for different businesses and individuals? And that's where I think the next step has to happen. The issue with credit is that, like she said, a lot of unethical things happen, whereby you have lenders calling your mom and your grandmother to pay back. But then if you consider infrastructure and that consequence become a bit more important, then that will change as well, and more people will get access to financial services beyond lending. But for me, I'm quite scared with lending. I want us to see more breadth across the ecosystem beyond that. But yeah, I think that's very possible for us to achieve over the next 5 years. I hope that answers your question.
Yeah.
Let me just follow on that, right? So we're actually working towards a world where people can carry out their financial transactions or live their daily lives with all the kind of activities that they require without having to walk into a physical financial institution, right? But again, for that to happen, right, there has to be a lot of education. We've been clamoring about, having a world where, people can carry out all their activities online, right? Do transfers, USSD, and all of that. And recently, the effect of the CBN policies on cash, right? And I'm wondering, so where is it, right? All these years of cashless policy and you being able to accept transfers, and, I send my staff to help me go get something and send me the account number. They're like, oh God, no, they say no cash. No transfer, And I'm like, where is the education, right? The cashless policy we've been talking about, where is it? So that just tells you that there's a lot of work to be done, first off, on educating a lot of people. He was talking about people keeping cash in their mattresses. It's the reality, right? A very large percentage of people still carry out their day-to-day transactions with cash. It would be very amazing to see, right? For me personally, I hardly use cash. I can stay a whole month and rarely touch cash, do transfers, anything I need. I have cards to buy groceries and all of that, right? But that's just a very minority of me and a couple of us here and people in this room as well, right? So we have to do a lot of work on financial literacy, digital literacy, let people begin to adopt these things, right? And then and only then can we now begin to see the shifts we've all been talking about.
Thank you. Thank you. Okay, so still you, Gerald, what are your final thoughts on this, on the future of banking and service in Africa? And I think that's it.
Okay, so we've always been hearing the statement that, all companies are eventually going to become fintechs, and that's the reality. We're already seeing it happening, right? So the funny thing is, even the traditional financial institutions are now rebundling as well, right? So you go to your GT Bank app, and then you can, pay for DSTV. You can do a lot of things. You can pay for your flight tickets. You can buy insurance. You can do all those things on. So the truth is, everybody, not just financial institutions, but also your everyday platforms that you interact with, will begin to adopt these things more and more because they now understand that people just want that seamlessness, right? And the fact that we've gotten to a stage where it's now technologically possible. There are APIs now that can power all these things, right? So basically, all companies and all platforms are also going to become fintechs. That's my take.
Sure.
And just to add to that as well, so when you think about it, embedded finance has actually been happening basically since inception, right? Because as a kid, I can remember going to the supermarket and saying, oh, I'll pay back tomorrow. And can I take this good upfront? So that's also like the supermarket offer me finance. The difference now is that it's happening digitally. So embedded finance is just trying to mimic what happens online, really. And the future is, like I keep saying, you would never have to go to a fiscal branch or a fiscal bank branch to basically conduct any financial transaction. That would happen at the tip of your finger. But yeah, when you think about embedded finance, it's actually been happening since inception. It's just now that it's been happening online. That's the difference.
Okay. Any final thoughts? Yeah.
Yeah, so I just want to add to everything that you've said that I feel like the future of embedded finance gets more and more interesting. So imagine that you're buying like a shirt online, say from GameStop, and or let me use Crocs, right? And you want to buy a yellow Crocs, and like if you buy the yellow Crocs, then it means you buy some fractional shares from Apple, like just automatically. Or you buy the blue Crocs, then you're buying fractional shares from Facebook. Those sort of things, like those are the things that are going to happen. You already have like vehicles like Mercedes, right, that are saying that you can now subscribe for air conditioning if you want. So you don't have to pay for the full air conditioning. If you want air conditioning, just as you turn it on, then you sort of pay for that use. Like just those things like that. I feel like that's going to be like the future of finance, of embedded finance. Thank you.
Thank you. Did you last thoughts? Because we're
Yeah,
rounding off now.
I love what she said
Yeah.
because it's one of those things we always have in the back of our mind. So it means that you could get a world where you have a car, you have a TV, and you can use it as you pay for it as you use it, right? And it's going to be seamless. So I buy a TV and maybe I pay 10,000 per month and five won't be 100 naira per hour that I use it, and it's just going to happen. And basically, from a technical point of view, one of the things that will probably happen is that as embedded finance starting, it's still chaotic, right? A time will come when you will have things coming around common standards, and then you can start seeing even processors, electronic chips designed for payment that can handle payment very well, that can handle payment securely, being part of everyday devices, and that will be it. And like I've mentioned, nobody will ever call it embedded finance again. It will just be part of our daily life.
Thank you. Thank you, Gerald. Thank you, Yele. Thank you, Manuela. Thank you, Adidiji. Thank you, everyone. I hope you learned one or two things today. We've come to the end of this session. Thank you for joining us. God bless you. Let's take some.